All right, what is up, traders? What's up, tycoons? Super excited for today's video. We are going to go over a lot of really important data that you guys need to be aware of. All right, so we are going to cover TLT. That will be about halfway through the video. I'm going to go over, the things that I'm looking at on TLT, as well as my some of my past trades from the past week or two. I've been getting back in the groove of things and really just kind of focusing more on TLT and the things that I'm good at personally, rather than trying to mess around with all of these other things that's going on in the market. So make sure to smash the like button, subscribe to the channel if you guys are new. You can skip forward to the halfway part of the video if you guys want to just go straight into TLT. But there is a rare signal, guys, that hasn't flashed since the start of the bear market. And we're talking about the very beginning of 2022. And that is going to be the VIX, okay, the volatility index. If you look at 2022, okay, right there in the beginning in January of 2022, the VIX was back at the levels that we recently came to, right? We literally came back down to those levels. And not only that, we're building a bullish divergence, which if you're new to the channel, you may not understand what bullish divergence is. But if you've been, a fan of the channel and been watching, I'll break it down for you guys. We have a low right here on the VIX, and then we create a lower low right here, right? So it's clearly in a downtrend. But when it comes to the RSI, this measures your relative strength of a stock, of the VIX, of whatever it is you're looking at, right? We can see that we're making a low and then we're making a higher low here. So not only are we retesting these levels that we were at when we started the bear market, we also have bullish divergence on the VIX, and this is on the weekly time frame. So, if something like this was to play out, all right, and this bullish divergence was to cause a bullish pop in the VIX, all right, this would take weeks, right? And so it wouldn't be like an overnight move, and it would be a little bit more of an extended move, and possibly we could be seeing a pop in the volatility index here soon. So I just want you guys to be prepared for that. Be aware. All right. I know that a lot of people are wondering why the market's been rallying. We're going to go into that as well, just so that you guys, have some good data and you can really start to understand things a lot more. Now, before we go any further, the content provided on this YouTube channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, crypto, all of that involves a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. Now, stocks post a strong rally into earnings season, right? And that's what we're looking at right here, this data set, this bar chart. Okay, if you take a look here, we're posting a very, very strong rally that we haven't seen since 2008, 2009. So really, really, really interesting right here, right? If you take a look in 08, it was very, very disastrous. Okay. But right here, we've had a very, very strong rally heading into earnings season. Now we have officially started kicking off earnings season. We had the banks, we just had Netflix. And we're about to get a lot more later this week. We have Tesla coming out as well. Now, why is the market rallying so hard? Well, it's not because Zip Trader Charlie posted 6 reasons from Bank of America why we could get a bullish surprise this year, but he is a ravishing young fellow. So quick shout out to Zip Trader Charlie. But one of the things that Bank of America was talking about was immigration. You have Chat GPT. They're kind of saying that that's going to be disinflationary. The Fed pivot, of course, that's pretty much like the number one thing that everyone is looking at. Congress bailing out the economy with stimulation. Now, I actually just did a tycoon talk with one of the other option trading tycoons admins, Leon, and I basically kind of talked about this theory that, hey, we have the debt ceiling coming this summer, and it's most likely going to be resolved this summer. And while I don't think that it's necessarily the best choice, I do think that it's pretty possible that they will raise the debt ceiling. And once they do that, if you go and look historically, or you can watch that tycoon talk, if the Fed balance sheet is increasing, basically meaning that they're stimulating the economy, then the stock market goes up, right? And it's almost that simple, guys, when you really compare those two charts together. You also have stocks becoming more attractive versus bonds. The Russia-Ukraine war ends and tech companies spend huge amounts to compete in the AI race. So those are just a couple 6 reasons. Now, in my opinion, these are some of the reasons why we're actually seeing these strong rallies. Okay, if you take a look at core CPI, right, it does show that it's coming down, right, and it has been trending down. Now, I've actually been one of the people saying that, inflation and core inflation as well is actually going to be a lot stickier and stick around for longer. And we also have, oil prices, and crude oil futures are a leading indicator of core CPI, and crude oil futures recently broke a downtrend from basically the downtrend that they had. And they did that off of the catalyst from the OPEC oil production cuts. Right now, we haven't actually seen those oil production cuts come into play and actually start affecting the true supply and demand. But what we are is we're seeing futures pricing in some possible higher prices. Okay, so I think that there's a lot of stuff to be cautious of. Right, the market's rallying a lot because we see that core CPI year over year is going down. All right, but when we take a look back at the VIX over here, we see that the VIX is setting up with this bullish divergence. It's retesting lows of 2022, and we haven't really seen this since the start of the bear market, guys. And so maybe this is a signal if we break below here and we're able to flip this to resistance that, hey, maybe the bear market is over and all of the bulls have it right. But there's a lot of warning signs that we have, not only the VIX, but as I mentioned, core sticky inflation, if you look up that chart, it hasn't dropped at all. It's just gone up in a straight line, and then it's started to consolidate and move sideways, but really hasn't started to drop at all. Now, this is another thing that's been pumping the market right here. This is CPI again. And what you're looking at is the year-over-year diffusion indexes, and it's the weighted share of CPI components. So basically, just to break that down for you guys some more, the things that weigh over 2%, you can see that those are declining a little bit more. But the things that are between 2 and 4%, we saw a huge drop since the start of that's where we've basically seen a huge drop. And then the things that are over 4%, we've also seen a big drop in those. So, we're seeing downtrends in some of the heavier weighted components right now. And that's another thing that the bulls and the data analysts are really looking at. Now, my biggest factor, okay, to me has simply been market corrections during midterm election years. Now, every single year that they have had midterms, all right, the market has been green 6 months and also 12 months out the year. Now, I'm not telling you guys this now after it's late. I actually was making videos back in October, and if you take a look, I actually went long on the S&P 500. I went long on the SPY-G ETF with contracts that expired 6 months out from then, right, in June of 2023. So even a little bit farther than that. And it was purely off the data, right? There was a lot of bearish things in the market, but I actually went long with some call options in October. So I didn't perfectly catch the lows or anything like that, but I was able to capitalize off of that. And I ended up closing those around 30%. When I fully closed the position. And that was back in February. Now, a lot of people may be wondering, like, oh man, well, you missed a lot of this rally. Look at the price that I paid for these, okay? $6 a contract. If you look, the 52 strike right here is currently worth $5. There's something known as theta and time decay when it comes to options. And I had a pretty strong feeling that, okay, now's a good time to take profit, because even if we move up higher, if it's not an aggressive move, then there is a chance that I could get hit with that theta, and those contracts could lose some of their value. All right. But yeah, so that's what you're looking at right here, guys. Okay, the blue bars is green, obviously, and the red is going to be red. And so these are your corrections during the midterm election year. And this is your market performance 1 year after a correction. So, 1 year after a correction, the most recent midterms, the market was up 37%, guys. And you can see here that the low end is 15%, 12%, and 9%, which are, honestly pretty, good years for the S&P 500, especially in a 1 year performance. So, when you take into fact that data set, it was really hard for me not to at least go long with some type of position. Now, I didn't really load the boat up on shares per se, and so I may have missed out on some great buying opportunities, but there's also some chances that we could revisit some of the lows. if not retest them or re-break them. All right, but so I just wanted to kind of show, I am kind of putting my money where my mouth is a lot of times. I'm not really posting all of my plays on YouTube, but this was a really, really, big and I felt like really important data set was this midterm election. And so, we're we're right around that 6 month cycle now, approaching there, and we could see a pullback. But if this data set is going to be true and play out, there hasn't been a year where after we've had a midterm market correction, that the next year the stock market wasn't green. So that's kind of just something you need to keep in the back of your mind. Now, here recently in the past year, and also really since COVID started in 2020, what we've been doing is we've actually been doing things that have never happened in the stock market. There's been multiple times where people are looking at data and they're saying, hey, well, this bear market rally was the strongest. It's staying over the 200 moving average for this amount of time. We're not going to hit the bottom. And then what did we do? We ended up creating new lows, and ended up going lower. So, prior performance and past data is not always going to work 100% of the time, but it's just some good, interesting things to keep in the back of your mind and consider. Now, even with that being said, we still have to keep in mind this data set and this signal that we haven't tested these levels on the VIX since the literal start of the bear market in January of 2022. So we could see some type of pullback, guys. Now, we don't have to. As I mentioned, the VIX can break below this level and try to flip it to resistance. But, I'm seeing that, hey, if you wanted to, you could even try and call this a double bottom. All right, where you see, we have the bottom here, and then we're coming back down, retesting the lows, and potentially you could call this a double bottom. Now, not only that, we have the bullish divergence with lower lows on the price action, but higher lows on the relative strength index, meaning that this thing is building relative strength, and we could see some type of bullish activity in the future. Now, it's a larger time frame. This is the weekly chart. So, yeah, I wouldn't necessarily expect anything to happen, today or anything like that. But we could end up seeing some type of move in the future. Okay, so just kind of be prepared for that mentally. Be cautious. Now that's the VIX. Now, how would that work out in the S&P 500? If you take a look where we're at, okay, we're basically following the Wyckoff accumulation phase right now. And so this is kind of where we're at right here. All right, this is kind of where we're at. All right, and if you take a look at how it plays out, you actually break through the previous lows. Now, this could have been it over here. Okay, so this could be our spring or shakeout right here. But the way that I see it is, we have the selling climax right here. That's kind of over in this area. And then we have this secondary test. Okay. And this is our secondary test. And, if that bullish divergence on the VIX plays out and we see, some really strong moves to the downside come, it wouldn't be too much of a surprise. And I'd be looking for this scenario on the S&P 500 to take us down into the spring or shakeout and potentially retest or break some of our previous lows that we made here. And if that happens, I'm going to be looking to be going long right here at this situation, and looking to, catch the move up into the range breakout. So that's just one possible scenario. Okay, this doesn't have to play out, but this is one that I'm, closely monitoring to see how it's going to develop and if we're going to follow this Wyckoff accumulation phase right now. All right, now let's get into TLT. Okay, and TLT, I've really been focusing a lot on this one here, recently over the past week or two, just because it's my bread and butter and it really follows the signals very well. Now, I'm normally on TradingView, okay, but I pretty much only use TradingView for YouTube videos. And so these are some of my actual charts and supply and demand zones that I have on my Thinkorswim account, which is what I'm using during, live market hours to really get the best, accurate data. And so, some of the signals that we had here, okay, what I mean by signals is we had this trend line, okay, so we had a trend line here, here, and here that we tested, and you can see we broke through this trend line. So, to me, it seems like we're going to fill this big blue box right here, which is a gap down around the 103 area. And, this is something that I've been mentioning, but, TLT was also due for a bounce And I've been able to play the bounce actually the past 2 days and get some really, really nice profits. We'll get into those in a second. But so not only did we have the trend line break, the main signal really that I've been, emphasizing on YouTube, especially on the daily time frame, which is the time frame that this specific chart is on, has been the MACD, guys, which is right down here. And so when you see it cross to the upside, all right, that's typically known as an entry signal. And if you take a look at where that entry signal was, it was right under 102, about 101.50, and we pushed up all the way up to 109. That was a very strong move. We reached that overhead supply zone and got a pullback, right? Over here, we recently got the MACD sell signal, which is when the line crosses below, right? And this is a bearish crossover, and that happened right over here. And you can see since that point, we've moved from down about 107 all the way down below 104. So, currently, we also have the momentum index right here, and this is our momentum SMA crossover. And so the red line here is your momentum simple moving average. And we crossed below the momentum simple moving average right here. And we tried to get a little bit of a fake out, with this wick right here and this hammer candle. But ultimately, buyers weren't able to really take control. And we got another momentum crossover to the downside. And momentum is now actually down below zero. Now, last time it went down below zero, it didn't stay there for long. But if we end up breaking these lows on the momentum indicator, most likely, again, we're going to see that gap down fill. We also have another gap down to fill right around to the $100 area, which is also going to be a big area of demand where I may be looking to go long for some scalping or some day trades in this area. But, we have this gap down to 100 to fill. So, definitely pay close attention to that. First things first is we would have to fill this gap down here at 103. Often gaps tend to act as areas of support or resistance on top of areas that will fill. So, you can see that we actually came down and we're holding the top of this gap right here as support right now. And, we came up into the smaller supply zones, got a little bit of a pullback. So we're going to see what happens. Now, you can put a lot of these things into practice, guys, and you can make some, decent money with this. Okay. If you take a look here, some simple things that we're going over is the MACD and also bullish divergence. So right here, we have a MACD crossover to the downside, and we see the line get the crossover. That's right over here, right around pre-market / market opening. This was a prior demand zone, right? This area here, and we bounced there the day before. Okay, and we're looking to see, are we going to consolidate and bounce up through here, right? And are we going to see buyers step in, or are we going to get a quick movement to the downside because buyers are not there and we're going to see strong selling? Well, we ended up getting that strong selling signal, okay? And we got a MACD crossover to the downside, and we also broke our initial bullish divergence trend line right here. So take a look how we had a low and then a lower low, and I actually played this pop right here and got about 60% on a day trade just off of that bullish divergence, okay, where we had a low and then a higher low, but we had a low and a lower low, and then we were testing an area of demand. So really I had about two things there telling me, possibly to go long. Went long, took profit here at this line right around 105.13, which is why that level is right there. And then, the next day we got strong selling in that demand zone. It turned into a supply zone. We got a MACD sell signal and very strong push to the downside. At which point I ended up going long again on a day trade. And then once we opened up back in this area again, I went long on a day trade, right there early, first thing in the morning. And we also had bullish divergence again, guys, right? So we have these lows, we have these equal lows now. So really, the stock is staying flat, TLT is staying flat, but look at the RSI. We're making lows, higher lows, higher lows, higher lows in a strong uptrend. So we're building a lot of relative strength in an area of demand. And what do? We push right up to that supply zone and then end up selling off. So if we zoom in a little bit more, this is that same price action. Okay. And now what I'm doing is I'm zooming in on the smaller time frames because I have the setup here on the daily chart, or I'm sorry, the 1 hour chart, which is what this is, right? So I have my 1 hour chart set up, and now I'm looking for precision entries and exits. And we can see here that we got a momentum crossover to the upside, right? So we see the momentum cross above the momentum SMA, all right? The clouds are green right here. We're in that area of demand, taking it long. We pull back, retest this area of demand. So boom, breakout, retest, push higher into our area of supply, taking profits up here at this area, and was able to get 60% on that trade. Very nice trade. And I was actually regretting a little bit not going short up here once we entered that area of supply. We ended up getting a momentum crossover and then a MACD crossover to the downside shortly after. And, using some of these signals together can really be beneficial, right? Like over here, when we got the momentum crossover and then shortly afterwards, we got the MACD crossover and we pushed up to the upside. Over here, we got the momentum crossover to the downside and then MACD crossover to the downside and went down. So if you're wondering how I'm getting these type of profits on TLT, simply moving like 60 cents or like 50 cents or a dollar even, it's because I'm trading options, right? Which is really why I love options so much, is because they're highly leveraged assets. So, TLT is not extremely volatile. It'll move like 1%, 2% is a really big day for TLT. So, you can be a little bit more precise with your trades. It's a little bit less risky than trading something like Tesla or Nvidia, where if you get caught on the wrong side of the trade and that stock ends up running 5, 6, 7% that day, most likely, if it's in the opposite direction of your bet, your option trade is going to be down very, very significant. So, that's why I really like TLT. And this is another trade that I had in the week. Very similar concept, guys. I was actually at the doctor's office in the waiting room, and I just can't resist, guys. So I was posting this stuff in the Discord. This is the 5-minute chart here. We had this trend line. Okay, you can see we're getting multiple touches. The more times you test the trend line, the weaker it gets. Here we get the breakout, retest, and we start to push higher. I take an entry position here after we've broken out. Now, not only did we have a trend line break here, we also had bullish divergence where we had these lows and we had these slightly lower lows, almost more of equal lows, but slightly lower lows. But we're building a lot of relative strength, right? And we're seeing this bullish divergence. And so what is my game plan here? Like not going to be greedy and try to get a dollar move out of TLT or more. It's simply play the break of the trend line, look for a retest of VWAP. And this purple line right here is the VWAP. And as I posted in the Discord, I said, hey, I'm closing my position here right at the VWAP. It did go up shortly past the VWAP, but ultimately it ended up reversing and heading back down. So, these are, the profits on my accounts, not even like individual trades, but like the whole account for the past 2 weeks. Now it's still early in this week at the time of this recording. I'm recording it late Tuesday night. This will be dropping early Wednesday morning. But, been able to have some really good days. Of course, not every day is going to be great. And, I'm never going to win all of my trades. And no one's ever going to do that. But it's more about just, being consistent and seeing what you guys can do consistently. And, what gives you an edge, where your edge in the market. For me, really lately, it seems to be TLT and just focusing on some basics, keeping things pretty basic and pretty simple, waiting for, the things that help really to give me an edge. Now, enough about the trading. Let's go back into some market data. Now, the bond market has been extremely volatile compared to the stock market, especially if you're looking at something like the 2-year treasury. The blue line here is the VIX index, and then this like pinkish line is going to be the MOVE index. All right, and we can see the volatility in bonds, guys, has been up, down, extremely, extremely volatile. Meanwhile, stock market volatility has been relatively flat, especially for the entire month of April. It's really just been moving sideways. Meanwhile, the bond market is up, down, up, down. So really, really strange times that we're in right now where the bond market is super, super volatile. Typically, it's something that's going to be a lot less volatile than the stock market. All right. Now, just some more things that, a lot of the bulls have been seeing. I'm trying to show you guys, and because I know pretty much everybody is bearish right now. Okay. Whether you talk to an analyst, whether you talk to your friend, whether you talk to someone on the street, they're not super bullish on the market, but the market is continuing to push higher. So I want to just kind of give you guys some data and some different charts and things like that to show you, what other people are seeing and why some people have been bullish in these time periods and been able to make some nice money. All right, so what we've gotten is another strong breadth search. And this is actually the signal right here, is these little green diamonds right here. And the signal doesn't always work, but it's a pretty good signal. All right. And we can see that we had another one go off here recently, and we had multiple this year already. And so we're going to see, if that continues to play out or if it's possibly a bull trap. All right, this is a log scale. And so the log charts, oftentimes people use the log charts because it kind of works with their signals a little bit more or the specific data set they want. So that's something you always got to kind of keep in mind whenever you see log scale charts, is that oftentimes it's because the data may not work or the signals may not work on the standard, type of chart. Now we're going to move on a little bit more, and we're going to go into the S&P 500 futures here and take a look at the large speculation positioning. And you can see here that this is actually a pretty good one. All right. And so what this is right here is when you're seeing extremely low positioning, that oftentimes marks a bottom, right? And what happens is FOMO, which is fear of missing out. It's one of the simplest things that everybody knows about, but things start to go up, right? And the positioning levels were extremely low. If you look, we haven't reached these levels since 2011, right around when 9/11 happened, okay? And that was a big catastrophe, right? That was a huge, huge deal. But these extremely low, large spec positioning oftentimes, end up leading into rallies because what happens is the market recovers, and then people missed out on the rally and they end up buying these tops up here and pushing the market higher, right? We saw that over here in COVID 2020, and we saw a strong push up. We saw the same thing in 2019, 2018 right here. And we saw another push up over here in 2016. So, like there's always going to be a bull market somewhere, and if you go through the right data, you can find bullish data every single time. Just like if you wanted to be a perma bear, you can find bearish data every single time. So don't get focused too much on one narrative, on one bias, because it will keep you blindsided, right? And what you want to do is have an open mind, open perspective to a lot of to really all the different scenarios, and use the data that you think is best, and the data that you trust the most, and you can kind of use that to help guide you a little bit more than just having the same narrative, right? A lot of time market sentiment is changing every single day, and so the same, if you're still holding on to the same theory for 6 months in the future, and you're not really going through the new data sets and updating your analysis basically, then you can miss out on a lot, whether it's to the upside or to the downside. So that's why we're kind of highlighting this. Now we mentioned positioning, okay, and we just took a look there how positioning was extremely low. What's not extremely low, what's extremely high is equity shorts. The net short positions in the S&P 500 E-mini futures is at its highest level since 2011. And if we go back to that previous chart again, we can see that the large spec position is also at its lowest levels since 2011, guys. So, what if this scenario is going to play out again, right? Now, I'm not super, supportive of this, right? I do think that there's a lot to be worried about, but when you combine this data set right here, okay, that we're retesting the 2011 lows, right? And we ended up just going into a super bull market after that. And, we saw where positioning was. And then you take a look at this and you take a look at, the huge amount of shorts that we have on the market right now. And we haven't seen those levels since 2011 as well. And then you take a look at this. This is a survey that JP Morgan did. It said they were asking people, are you more likely to increase or decrease equity exposure over the coming days and weeks? And this is, guys, this is extremely low. We haven't been this low in an extremely long time. It's at 26% of people were planning to increase their equity exposure. So really about 3/4 of people are bearish right now. And, oftentimes when everyone is bearish, that's maybe not be the right, position to be in. Now, you don't want to be only in contrarian plays just to be a contrarian, but you do want to ask yourself, all right, well, when everyone's bearish, is there a chance that the stock market could actually go bullish? And is there any data to help support that, right? And so hopefully you guys appreciated this video. I went over a lot of material in here, as well as kind of some trade recaps and a little bit of my trading style. If you guys want to see more trade videos, I will post those more. Those really don't tend to get as many views, and I have a whole ton of trading videos that I've already put out. So I really just try to go over a lot of data. I do have a lot of bearish data that I'm going to be dropping in my next TLT video. And there's a lot of concerns, especially with the credit spreads, commercial real estate, things like that. But I don't want to come off too biased, right? And I want to actually keep you guys in the loop on the info that's important. And not only is the things to be cautious of important, but it's also important to know, some of the reasons why the market's been rallying. Now, just because it's been rallying and, we're seeing a lot of these signals doesn't mean that that has to continue. We are also getting, as I started the video off, we're getting this signal that we really haven't seen since the start of the bear market. So that's definitely something to be cautious of. If you guys aren't unsure of anything, you can use patience, right? You don't have to necessarily catch the bottom every time, and you don't have to FOMO into the top of everything as well either, just because, Brad from down the street is telling you how he's up 100% on his NVIDIA shares and he just bought, 4 or 5 months ago, right? So that's basically it for today's video. Smash that like button, subscribe to the channel if you guys are new, and I'm out.